For retail investors, the first thing, of course, is to survive. So make sure that you have enough money that your lifestyle is not impacted. The second thing, if you have extra money, now is actually not a bad time. Well, different people use different strategies. I don't want to recommend any specific strategy, but
How's Binance holding up during the bear market so far?
We're fine. We don't have any debts. We don't owe anybody any money. We're still profitable even today, and not that many people owe us money. We have pretty good debt control. So we're pretty good. Many companies, when we're in the bull market, many companies just sort of expected that the bull market will continue indefinitely. Markets don't do that. Market go bull, bear, just goes in cycles. So we understood that, and we just held a fairly large amount of cash reserves during the bull markets. And luckily also for us, our income comes into different cryptocurrencies, and stablecoin is one of those. Like stablecoins accounts to about 25% to 30% of our income. So we're relying heavily on that now. So yeah, I think overall we're like just because we're in a new industry, we are quite expectant of the cycles. So just having that mindset really helps, I think. So basically, we're looking at like all the same opportunities come to all of us. In fact, like we look at all the opportunities, we probably have first picks on all of those opportunities. So we try to keep it. We try to respect the confidentiality clauses we have with our partners, so that we don't really disclose ongoing deals. So if there's a deal in discussion, we try not to disclose much of it. And even if after it concludes, we still try to observe the confidentiality aspects of it. But the same deals that you see in the news that other people look at, they typically come to us first. So being the large, I think I'm pretty confident we have by far the largest cash reserve right now, and most of this, and so we do have first picks. But not all deals. We like to save the industry as much as possible, but not all projects are worth saving. If the projects are badly run, badly designed, other problems that are hard to fix, then it's generally not good to put good money after bad money, right? You don't want to bail out companies that are mismanaged. But we do want to help the majority of companies to that have a little bit of a liquidity crunch to go through this cycle. And we're talking with 50 plus of them. Yeah. For retail investors, the first thing, of course, is to survive. So make sure that you have enough money that your lifestyle is not impacted. The second thing, if you have extra money, now is actually not a bad time. Well, different people use different strategies. I don't want to recommend any specific strategy, but some people micro seller, El Salvador, they're buying now so that the average cost actually comes down. And if they can last for a few through this bear market, on the next bull market, they'll have more holdings. So now it's actually a very cheap time to buy. If we're in a bear market. I want to be careful giving financial advices, not giving financial advices. So, but for retail investors, it's the same. Focus on my advice is always the same. Focus on a small number of projects that you know well, and if you know that the project is going to survive, and you can tolerate the risk, by all means. But understand that tomorrow the market may go down even further. It may go up, it may go down. Nobody knows what's going to happen tomorrow. But longer term horizon, the industry is staying. The industry is not going away. There's more apps being developed. There's more people in the industry. So the industry is going to get bigger if we look at 5, 10, 20-year horizons. I don't really have no opinion. It's very hard to predict the future, but historically we've seen very accurate 4-year cycles. But there's also many things in the world that are 4 years. The Bitcoin halving is every 4 years. The United President's election is every 4 years. The stock market goes through a 4-year cycle as well. If you look at it historically, so it doesn't mean that the next cycle will be exactly 4 years. But I think there is a pretty decent probability that might happen. So to be honest, to be very frank, I was kind of surprised that Bitcoin only made an all-time high at 68,000. I thought it was going to go much higher, but again, I was wrong. So I'm never good at predictions. But all of those things, in theory, should help crypto. But the fact that right now we're going through a winter is kind of surprising to me. But again, no one can predict markets. I can't. But logics do work in the long run. So that's my experience. I think we're going to be totally okay. There are a group of people, there are a very large group of people that I know that is not going away. So there are some new investors that get shocked, surprised, fear, and they go away for a while. But pretty much of all the people I know who are here since 2017, those guys is going to stay. And as a business, I would recommend most businesses have at least 10 years of runway, 10 years of cash if they have zero income. Very few traditional companies can achieve that. But in the blockchain world, it's actually not that hard to achieve. Binance, we had like the Binance coin is about $40 billion market cap. We have the team portion we never used, and we do commit to burn that. But we also have income. Like even the team portion is worth double-digit $billion. So most crypto companies sit on this. If they manage well, they could be sitting on this really large cash reserve. So and even if we don't touch that, we actually still, that aside, we actually still have very healthy reserves that will last us many years. So they are, and also in the crypto business, they are very clear, very simple business models. You should have revenue, and because we're dealing with crypto money, we're dealing with this industry. It's actually not difficult for good businesses to make money. Binance wants to provide tools for people to access crypto, so we want to be the infrastructure tools provider. Whereas even other exchanges, we can tell that they go into stock trading. They just want to be a trading house. They want to trade, and they want to charge. They want to make money on commissions. Whereas we have a lot of tools that have no revenue. We have a decentralized wallet, Trust Wallet, that zero income, no revenue. We have CoinMarketCap. They used to rely on advertising revenue. We removed all advertising from CoinMarketCap. So we just provide access to crypto information. So we want to be the tools provider for crypto. This is the reason why we're not going to stocks. We're not going to provide stocks trading tools. We're in the Web3 crypto world. So there are some subtle differences between different companies that, at least from my perspective, I can see. Nothing wrong or right with any of the approaches, but Binance is more of a Web3 tools provider. In the decentralized world, well, first of all, centralization is not black and white. It's not one or the other. There's a spectrum of number one is a spectrum if we look at any particular aspect, and there's multiple aspects we got to look at. So each one of them is a gradient scale. And so, for example, if we look at any cryptocurrency or blockchain, Bitcoin, I do think is by far the most decentralized blockchain, cryptocurrency, etc. But if you look at Bitcoin mining, it's quite centralized. Like the top two miners top 2 or 3 mining pools will control more than 51% of the mining power. If you look at Ethereum or BNB chain, you can still associate a founder with those two blockchains and many other blockchains. So Ethereum, in that sense, if Vitalik suggests some changes, most likely the community will go with his suggestion. For BNB, myself, we can still identify that, even though I'm less technical, much less technical than Vitalik. But if I suggest something, the community most likely will support it. So that's centralization as well. So Ethereum and BNB having the identifiable founder is actually a less decentralized mechanism. And then there's how many nodes each blockchain has. And also, if you look at Binance.com, yes, Binance.com is a centralized exchange. And how many users do we have? We probably do have the largest user base in crypto now. So all of those are type of centralizations. Where there is a line, where it's good or bad, it's very, very difficult to tell. And as you said, so for example, the most decentralized manner would be like everybody working for themselves, no company, no organization. In a decentralized world, any two people can choose to work together. When they choose to work together, that's centralization. If you and I work together, then we're more centralized than David, because David is working alone. But if we all work independently, are we able to achieve the maximum impact that we can achieve today? Probably no. If we didn't start an organization, if we didn't hire people, to work on common goal, then Binance would not be able to onboard so many users into crypto. We would not be able to provide the kind of tools we could provide today for hundreds of millions of people that use them today. Are those centralization? Yes. Are those bad or good? I think so far we've done good. But if someday I turn evil and then do something bad, then that's not good. So decentralization prevents a single person or a single entity turning evil, which is a good prevention measure. So, but in a decentralized world, you cannot prevent people from working together, right? So you're not supposed to interfere with other people as long as they're not harming you or not harming themselves. Also, to be honest, decentralization itself is actually not really the goal. The goal we want to achieve is give people the freedom. We want to develop technologies that give people freedom, ease of use, low fees. So freedom including permissionlessness, meaning that if you want to send some money to somebody else across the world, that's legit activity. You're not doing something dodgy. You should be able to do it. So we want to protect the fundamental properties that we want to achieve through decentralization. In the process, there will certainly be certain levels of centralization, groups working together, etc. But we don't want that to be the ultimate goal. It should not be ultimate goal for a single organization to control all the world's crypto, etc. So when a single organization gets too big, we should look at ways how to diversify that. To the extent that we actually invest in other crypto exchanges, centralized exchanges. We invest in our competitors, so that we actually want other exchanges to exist more exchanges to exist in this industry. This way we can grow the industry faster. Right now, we not being arrogant, but we're doing the lion's share of the work on onboarding users into crypto. So we want to see more people doing that. So I think crypto is a technology that can increase the freedom of money for billions of people around the world. And throughout history, anytime we can increase the freedom of something without sacrificing other aspects, security, compliance, ease of use, fees, etc. If we can increase the freedom of something, our civilization advances. So if you look at freedom of speech in some countries only today, freedom of press, again, only in some countries, freedom of information, freedom of education, freedom from slavery. Anytime those things happen, and those things happen over a number of years, they all didn't just happen like that. They all took multiple decades or even centuries for those changes to come. But when those things happen, our civilization advanced. So today we have the new technology for money that can significantly increase freedom. Today our money is not that free. Like even after you pay all your taxes, if you say you're an entrepreneur in China. In China, if you move more than $50,000 US dollars out of China in any given year, that's called money laundering. So if you're a successful entrepreneur in China and you want to buy an apartment in Paris, guess what? You won't be able to move the money legally. This is your after-tax money. So that we don't have the level of freedom there. I think, number one is it's not like win or not, it's not succeed or not. Like we're all here persistently, consistently pushing forward. Mm-hmm. Sometimes a bit faster, sometimes a bit slower, depending on overall market conditions, macroeconomics, and other factors. But we're all here. We're not going anywhere. We're just consistently and persistently pushing this industry forward. So I think 10, 20 years from now, people will be using blockchain, crypto, the way they use the internet without mentioning it. Today, I don't say like, hey, I'm gonna use the internet to message you. We just use it we just use it. There's many different applications on it. So I think 10, 20 years, we will get there. 10 years might still be a little bit tough, to be honest. Even if you look at the internet today, when we talk about video conferencing, sometimes still doesn't work that well. But I think eventually, like people shouldn't be talking about blockchains. People shouldn't be talking about consensus, nodes, and all this other geeky stuff. People should be like, hey, I'm sending you some money. Hey, I'm doing a fundraising globally. I'm selling my art globally. I'm gonna hire a trainer, fitness trainer in the metaverse. So all of those things should come naturally and without mentioning any technology. We will get there. It's just a matter of time.